make millions trading without a strategy? That sounds really stupid. I totally get that. Look, I'm just some bald guy in a walk-in closet as my office, yelling at you in a YouTube video about what works for me. I don't know what the hell's going to work for you. Most people lose money. You're probably going to lose money trading. You probably shouldn't listen to anything I say. You'll probably make more money if you just go get a job at McDonald's making minimum wage. But yeah, we're going to leave that aside. You should probably just leave this video. But check this out. I've been trading for 7 years. 5 of those years have been profitable. First 2 years absolutely sucked ass. And here's what I've learned. Trading, what if you're trading Forex, stocks, crypto, and I do all of those, trade all 3 of those. I've made millions of dollars trading the financial markets the past 5 years. Here's what I found. We're going to come in a little close for this. We're going to get pretty serious here. I'm going to stop making all these jokes because this is important. I think that intuition is a little bit more important than actual science in trading. Science is setting objective criteria, gathering data, metrics, and stuff, and I think that needs to be done. Yes, we need to have a simple approach for things that we can duplicatively do in a predictable way, consistently and sustainably over and over. But I also think there's this thing that some people think is magic, but it's intuition. It's just your subconscious training of seeing the same stuff over and over again through applied experience that gives you this little feeling of what you think is about to happen in the markets. I'm going to show you how to exercise this feeling so that way you can use it to hopefully benefit you. I can only teach you what has worked for me. So I'm just going to show you what literally works for me because no one can argue with that. Why can they not argue with that? Because I've literally traded live for free in my free Telegram channel for 5 years. And you can click the first link in the description after this video. That way you can actually learn how I trade first. You can click that first link in the description and you can go see for yourself. Every single day I share the trades that I'm taking, the analysis that I'm looking at, literally share weekly pre-market outlook videos, like literally everything. It's all there for free. It's really, really simple approach. My approach is not that complicated. I pride myself on just keeping things simple and controlling risk. It's what works for me for years and years and years. So I'm going to show you how I trade, but without per se having a strategy. This, like I said, this has made me millions just being able to do this. Mostly of what I use is just support resistance, and I mean, it's just not that complicated. It's just the same old stuff over and over again. So I've shared my screen. We're going to keep it super ridiculously simple. We're not even going to use a candlestick chart. We'll just use a line chart just to show you how like mind-numbingly boring it can be. We'll pick a random currency pair. This is FX. Let me just do a number between like 1 and 10 here. Number 4, what pair is that? 1, 2, 3, 4, Euro AUD. Okay, pretty good pair. And we'll go to a different Euro AUD so that way it doesn't screw up my layout. We'll use like FXCM data. Make sure all the drawings are cleared. Okay, cool. So now we'll scroll back to somewhere random. I'll just look this way for a little bit. Scroll back somewhere random, and then I'll stop right here. And then I'll click the Trading View replay thing. And this is from August of 2020. Okay, cool. So here's what we'll do. No strategy, nothing specific, nothing complicated. We will look at the chart and say that this is what I think will happen. And if it happens, cool. And if it doesn't, we'll figure out how to manage it. What I'll do for this is I'll use dollar cost averaging and hedging as a risk structure for managing these trades. After this video, feel free to watch my other videos. I literally go in this for detail over and over and over. I have thousands of dollars worth of courses you can buy from me. You don't have to buy a single damn one. Unless you just want personalized help or something, or have a group chat or whatever. You don't have to buy a single course from me to learn how I trade. I literally teach it all for free on my YouTube channel here. I'm about to teach you here in this video, as well as in my free Telegram channel, which after this video, God, don't click it right now. It's the first link in the description of this video after you finish this video. All right, so let's, we're here in the 1 hour chart. Here's what we'll do. We'll draw some little stupid boxes on our chart, which we'll call support resistance, potential areas where price might bounce. And what we'll do is if we'll enter a trade to profit from a bounce of the zone if we're right, and if we're wrong, we'll hedge, wait for the next zone, and then manage the trade. So price has gotten into this area where it might bounce. So here's what we'll do. We'll put a buy right here, and we'll hedge if price breaks below this zone. So meaning, if price breaks into the zone, we'll hedge. We'll start, let's say a $10,000 account. I normally start a $50,000 account. Let's start a 10K account. You could do this with 1K, 500, 2,000, $6,969. You can do it with whatever you want. And we'll just let it play out. So if price goes up from here, this will be nice. If it goes down from here, let's say we're risking, this is high risk, let's do 10% risk per trade. So $1,000 risk per trade. And we'll try to grow this account, I don't know, from like 10K to 20K, try to double it. So let's see what happens. So we buy right here. We'll try to target the next zone, and if price starts delaying the move before then, we'll roll out of it. kind of taking a while. We will just sit here and just sit it out. It's going to go up or down. Nobody knows what will happen. It's going to break the zone or it's going to go through the zone. So I personally think it's going to break the zone now. So here's what I'll do. I'm going to close this right here in a small profit. I'm going to put a sell right here. And then for that sell, I'm going to risk $1,000. I'm going to hedge if it breaks above these highs right there. Okay. Super complicated, right? Just support and resistance. It's going to break it or it's going to bounce at it. I think that since this failed to make new highs, I think it's likely to go down. And if it doesn't, if it breaks above these highs, that will be invalidated. And I'll be hedged at $1,000 loss. I teach hedging and dollar cost averaging in all my other videos. Just watch those if you want to learn. Trying to bounce here. Will it break the high? Yep, so it breaks the highs. So now we're hedged. And now I'll wait for this zone. If it gets up here a little bit deeper, I'll close that hedge in profit. So right there. So I'll close it in profit. Then I will add another sell. Then I'll try to get out of these sells at break even. So we'll see what happens. Break even point is somewhere like halfway in between. So we'll just see. All right. Comes down here to the next zone. Get in there, baby. Yes. Okay. So it came down here to the next zone. So how much was this in profit? About 175 pips. How much was this in loss? 130 pips. So it's actually a little bit of a profit. Let's just say it's not even profitable. Let's just say it's like a break even. So we broke even on those and we also made profit on the hedge. Now the distance between these first two positions for $1,000 was 186 pips. So since we profited 160 pips, 150 pips, that's about not a 1K profit, more like a $700 profit. So it made a $700 profit on that. And on top of that, ladies and gentlemen, we just broke even on the sell. So we were completely wrong and we still made money. That's cool. That's why I like hedging and dollar cost averaging. In this case, you saw an entry that failed. You saw a hedge and then you saw a closure at the next zone and then following by adding to the sell. Price bounces roughly 50% of the time at support resistance zones. You don't have to overthink it. It is either going to bounce or it's not. You don't have to be obsessive over what happens. So let's go ahead and add a buy right there. We will risk $1,000 if price breaks below this zone. We will hedge. Then we will wait for price to get to the next zone at that point, and then we will close the hedge in profit and add to the losing trade if it does that. 50-50 win rate. Price just goes up or down. So it goes to the resistance zone. It's pretty much up there. This is a 92 pip risk for a 167 pip gain. A little under 2K profit because it's almost double. Here's what we'll do. 170 would have been 180 if it would have been. So let's say it's a 2K. Let's say that's an $1,800 profit. Let's just round it down. Let's do 1,700, right? Let's just really make it realistic here. So plus 1,700. And like I said, half the trades are going to bounce at the zones. Is not fucking complicated. It's just it's support and resistance. What's it going to do? It's going to go up or it's going to go down. 50-50. It's okay. You don't have to be right every fucking time to make money trading. A lot of people get it in their head. They have these gurus tell them, you need a 1 to 3 risk to reward ratio. You have to have a 60% win rate, blah, blah, blah. I'm like, I don't even care. I've been trading 7 years. I still have like a 50% win rate. I barely write. And I still make bukus of money trading because of my risk structure. That's why I don't like using stop losses. Stop losses still work fine. I'm not hating on anyone here. I'm just saying, like, for me, it works better to be able to make money even when you're wrong. That is why I like dollar cost averaging and hedging. That's why I teach it in my compounding course, which you don't have to buy because you can literally learn it all for free here on my YouTube channel and in my free Telegram channel, as I share my trades and analysis every fucking day with the first link in the description. After this video is over, let's get this little simulation account thing to like 20,000 first, and then we'll wrap up the video. You can get back to your day watching whatever videos you want here on YouTube. Hopefully we get into like we need to figure out an invalidation. Hopefully we get into a nasty drawdown so I can show you guys how to manage out of it. So we'll hedge if price breaks above this resistance. And if price goes to the next support, then we'll just close the sell and profit. All right. So this was a $1,000 risk for how many pips of that? 130. So how much was this? 170 pips of profit? Okay, so it's a little over 1,000. We'll just say it's like 1,200. It's probably more, but we'll just say it's plus 1,200. I like to be kind of realistic as I can be on these because you'll have swap fees sometime, this and that, all this bullshit. All right. So since price already bounced here once and then made a lower high, I'm not going to buy here again at this zone. I'm actually going to make a bet that price is going to break this zone and go down to the next zone. So I will sell here. I'll put an invalidation above these highs to hedge if I'm wrong right there. That'll be a $1,000 risk. How many pips is that? You may ask. Well, that's a great question, my young friend. Let me just figure this out. So this will be 285 pips of risk, and if it goes to the next zone, it's going to be less than a 1-to-1 TP. Shoot me. I will routinely take profits at less than 1-to-1 based on what the context is and what's going to happen. Why? Because I don't have super specific trading criteria which mitigates like everything. I have a simple system which as a price gets to a support or resistance zone, buy or sell, hedge if it gets past it, wait for the next zone, manage to trade at the next zone. Even if I'm wrong 2-3 times in a row, I can still roll out of a trade and profit. It's all just, I don't know. Call it magic. Call it whatever the hell you want. It's just me trading. It's just me like using my intuition to help me make money. So price may, I don't know, if it bounces here and goes back down, I'm going to close it break even, but I think it's going to break up finally. So it does break up. So we're hedged at a $1,000 loss. Now what? Nick, the trade is hedged. We're in a sell down here for whatever. Let's say one standard lot. Now we're in a buy up here for one standard lot. What the hell's the point of that? Well, point of hedging is that it controls the risk. It mitigates any further losses from incurring until the next trading opportunity sets up. Then you can use the next trading opportunity to make money. In fact, let's see if we're missing any zones up here we could trade off of. I don't really see any clear zones, so I'm just going to like not do anything. Let's see if price can come back here and retest this zone. Yep, so it goes to retest the zone. That is good. So when it comes to retest that zone, here is exactly what I would do. I would close this buy down here at a, actually, no, I'm sorry, I would stay net long. What I would do is I would, in this specific case, I would just add another buy right here. And this would be the risk on this. I would put a hedge right there. So $2,000 or $1,000 risk, and I would just retain the original hedged. So this is the original buy, this is the original sell. That's a $1,000 hedge loss. This is a new trade based on its own criteria, based on the support resistance zone. So if price bounces and makes a higher high, we'll make a nice profit. If that doesn't happen, we'll be hedged at a $2,000 loss. Got dangerously close to that hedge order. Finally, so it makes a move. So we're hedged at a $2,000 loss. Now what, Nick? What the fuck? Like, what are we gonna do now? So here's what we'll do. We'll wait for price to get to this next zone. We'll retain both of the hedges, and then we'll enter a buy right here at this zone. Very, very complicated, right? Buying at support, selling at resistance. We'll put a hedge order if price breaks past this zone for a $1,000 risk, and if it bounces up, we'll close it and profit at this next zone. See what happens. It doesn't quite go all the way there. We need really for it to go all the way there for it to be a working trade. So we're hedged at $3,000 of loss. Oh shit, what now, Nick? Hold on, wait a second. The account's in a $3,600 profit. We've wiped out almost all the profits, Nick. Oh my god, what are we gonna do? Keep in mind, price is gonna bounce 50-50 at a zone. No matter what you do, no matter what you say, it's 50-50. Will you be wrong 3 times in a row sometimes? Yes, of course. It's a statistical probability. Does it happen often? No, from my experience, not really. But what do? You just don't freak out. You just do the same damn thing. You just keep trading trades. So let's see if it pushes up to this support resistance zone again. So it does. Let's go ahead and close that buy right there in a break even. And then we'll drag it out to here for a pending order hedge if it breaks above this zone to hedge. And this will just be hedged at a $2,000 loss instead of a $1,000 loss if this happens. If it goes back down, then we'll make profit. And we'll just keep in mind that our original entry was right there. That way we can calculate the risk. So finally it bounces. It needs to come all the way to the next support for us to be able to comfortably manage the trade. So sweet. So now price ended up going down here to that next zone. How much risk was this? This was a 90 pip risk and a $1,000 potential profit. Price moves here. It pretty much goes 90 pips profit. It's roughly a 1-to-1. So we'll close that there and a $1,000 profit. We'll delete this pending buy hedge. And now that we've closed in a $1,000 profit, let's close both of these here at a $1,000 loss. So now we're break even on those, right? Because we had a profit there. That worked. Ooh, thank the Lord, right? And then we also used that profit to close the previous hedge on that one. Now, what's the account balance? Well, the account balance remains, well, so the account equity remains roughly the same. $13,600 in the balance, with equity being only a $1,000 drawdown for these two trades. Now, what can we do? Well, you guessed it, folks. But wait, there's more. We're going to take a buy right here at this zone because it's a support area. And then we're going to have a hedge order placed below this if it breaks. And then we'll just let this play out. We'll try to close in profit at that next zone. Cool. So how much was this? 130 pip risk for a 160 pip gain. So instead of 1,000, it'll be a little bit more. It'll be like 1,200. We'll do 1,200. And on top of the $1,200 profit, we'll close this $1,000 trade at a loss. So meaning $1,200 profit minus a $1,000 loss. We're completely out of all positions. And on top of that, folks, made $200. That'll probably just cover commissions and swap fees. So, just say we weren't in these trades very long. It was like maybe like a couple days. 13,800, and we're in no trades. That's how, even if you're wrong, like even if I'm wrong 3-4 times in a row, right? In that case, I was wrong 3 times in a row. Like hedged. Finally, the fourth one worked, and then the fifth one worked. You are right 50% of the time, and you're wrong the other 50% of the time. If you use a specific risk structure to still make money, even when you're wrong, then it's great. Hedging and dollar cost averaging, in my opinion, is a great way to do that. Not financial advice. Do whatever the hell you want. This is just what works for me. Now, is price going to bounce at this zone? For fuck's sake, I don't know. I have no clue. But do I want to profit from it if it does? Of course. So I'm going to sell here. I'm going to hedge if price breaks above this little support resistance zone to the next zone, at which case I will manage the hedge if price gets there. And if it bounces, I'll take profit here at this next zone. And we'll go ahead and drag it up just a little bit. Just a wee bit, mate. Hopefully it goes to the next support. So it does. So if this was a $1,000 risk and that was 80 pips, it moved into profit down here, about 160 pips. So that's about a 1 to 2 risk reward, which is actually pretty good. Normally I get like 1 to 1 or less. Every now and then I get 1 to 2. So that would be plus 2,000. So we're getting this account on nice. We've grown it a little over 50% in a couple trades. How long has it taken since we started doing this? Like August, August 31st to like November. August, September, October, so like 3 months on this pair, not counting all of the other millions of trading opportunities you're going to get on other pairs. That's pretty good. 50% from just this pair net over the course of a couple months. Add in a bunch of profits from other pairs. It's no wonder why I double accounts over and over and over again. I've done it 6 times, a 50K account to 100K, and tracked all the results here on my YouTube channel and on my Telegram channel and in my Discord close friends group, where I literally share all my exact trades and analysis live with live Q&A Zoom sessions almost every single day. And also like the ability for people to tag me in the chat and ask me questions. It's just like it's a place for you to get more support if you want it. Again, you don't have to buy a single product from me to learn how I trade. I literally teach it all for free. But if you want like the community and this and that and all my specifics and be able to ask me questions and stuff, of course, yeah, I charge for my time. But aside from that, this is the same stuff over and over. So here's what I'll do. I'm going to buy here at this support zone. I personally think it's going to break this support zone. But again, you never know what's going to happen. So you don't need to act like you know what's going to happen. You just let it play out and profit from whatever does in fact happen. Price could break this support zone. If it breaks it, it breaks it. Whatever. If it bounces, it bounces. Then I'll close in profit at the next zone. No way. I thought it was going to break, honestly. I was getting excited because I was like, maybe we can get into another hedge and I can show you how I roll out of trades. But again, keep in mind, I suck at trading. My statistics are just 50-50. I'm right half the time, barely doing anything. Like, it got to a support, so I'm buying. People are like, did you look for confirmation, Nick? And I'm like, no. Was it the pullback to the 50% Fibonacci, Nick? And I'm like, no. Did you use the Gann fan Fibonacci spiral, Elliott wave, market maker liquidity, order flow, bank manipulation, institutional fair value gap distribution accumulation, Wagyu beef bullish candlestick strategy, Nick? And I'm like, no, I just bought it. I just bought it support. No matter what system you use to try to take entries, You're going to be right half the time. You're going to be wrong half the time. Fucking accept it. It averages out to 50-50. So 130 pips of risk, 130 pips of profit. That's about $1,000 win. So about a 1-to-1. That's most of my trades. Most of my trades are 1-to-1 or even less, honestly. I'm perfectly fine with closing a trade less. Why? Because I don't have rigid trading rules. I trade based on what I think is going to happen. And if it happens, it happens. Now, I'm not going to sell here. I think price is really likely to break this zone. Again, it's not going to go sideways forever. Here in this little range, it's going to eventually break out. I just think it's likely to break upwards to this zone, so I'm just not going to take a sell here. Yep, I'm a genius, right? A genius. I thought it would break above. I missed a perfectly good trade. Why? Because I'm like obsessing over like, oh, I don't know what's going to happen. Well, maybe it's going to do this. It's like, see, even I suck at trading and I still make money. Still, with this account, I've already more than doubled it. And I could have made more money here, but I was like stupid. I'm like, oh, I think it's going to break above. It's 50. You're going to be right half the time. The other half the time, you're going to be wrong. It's whatever. You don't have to be a million. Oh shit. We got to take a trade here at the support zone. So you don't have to have a crazy win rate to be right all the time. I apologize for hindsight 2020. Oh, look, Nick, it's already gone into profit before you entered. My bad. Okay, look, this one trade. Give me a little bit of a break here. Promise. I do it live, my free Telegram channel. We're almost to the end of the video. The account is almost to the $20,000 goal. So we doubled it. We'll see what happens. Hopefully we get hedged here so I can show you guys how I roll out of a hedge whenever it happens. So it looks like it's going to break the support and go down. And I'm wrong again. Well, in this case, I'm technically right. See how stupid trading is? It's like it's going to go up or down. You can have all these obsessive reasons. Even me, I'm like, oh, no, it's for sure going to break the zone, bro. It's going to go through, bro. And I'm even still wrong about that. But you don't even know what's going to happen. So look, I thought it would break. I was hoping to get hedged so I could show you guys more how I manage out of hedges. But again, you're right half the time. You're wrong half the time. 93 pips of risk for 160 pips of profit. That's about a 1 to 1.5, we'll say. So about $1,500 of profit. So plus 1,500. So the account's at 18,300. We're 1,700 away from getting the account to the growth target. So all right, so we'll see what happens here. I'm gonna do my little woo-woo mystical magical stuff here and say, yeah, I think it's gonna break the zone, guys. So I'm gonna try to wait for it to break and retest this zone or get to the next resistance, and then we'll see what happens. I have no clue what's gonna happen here right now. Honestly, it doesn't even look like that clear of a zone anymore. So let's see if it goes to the next support. Okay, so maybe finally it'll break this support zone. Maybe finally we'll get hedged, and I'll show you guys how to manage out of it again. We'll enter a buy here. We'll hedge if it breaks underneath the zone, and we'll take a profit if it moves to the next zone. Finally. Okay, cool. So we're hedged at a $1,000 loss. Now here's what I'll do. If it gets back to this support resistance zone, I'll close the buy. I'll keep the sell. And if the sell goes into profit, we'll make money. All right, sweet. So I'll close the buy right there. I'm going to leave that there just so we know like what the sizing was, because if that's a $1,000 risk and it's about 100 pip distance, so we can know the same. I will re-hedge if it moves above this zone, 100 pips. So it doesn't. Moves back there to the entry, which might be around break even. I'm going to see if it'll knock out the low, and we'll try to get a 1-to-1. So that means if this is a 1-to-1, it needs to move 100 pips down for us to make 1 unit of original risk, or I guess 1 unit of original profit. So it pushes up. Let's see. Did that go all the way? It didn't go 100 pips, so there's nothing to do here. Honestly, actually, though, let's see what it's going to do here. Potential bounce, yeah. I'm going to go ahead and re-hedge right here. So this, and I'll be re-hedged essentially at the same thing. I think it's might go up here. So I'm going to re-hedge right here to control risk. And if it goes up, I'll close the buy and profit and add a sell there at the next zone. Ooh, I was wrong again. So, all right, sweet. So now we're just hedged at $1,000 loss. We're still waiting. I'm going to wait for something clear to set up before I start getting net long or net short. So push back up into this resistance. I think this zone is like less likely to get respected, so I'm just going to leave this alone for now. And lo and behold, it goes down. Yeah, that's great. Amazing, right? I'm a god trader. I'm a super, super amazing guru at predicting where the market's going to go. I'm amazing. Looks like the next support zone is down here. So I will wait for price to get down there before I manage these trades. And we'll go back to the 1 hour just so we can get a little bit more opportunities. So, all right, so price gets down here to this zone. Due to the potential for the bigger invalidation and risk, here's what I'll do. I'm going to save that original hedge right there. I'm just going to leave it alone. I'm just going to keep it there. And I'm going to enter a buy here with a hedged order just below if it's $1,000 risk. And if it bounces up, we'll have a nice profit. Ooh, is it going to break? Oh, yes, it breaks. So now we're hedged at a $2,000 loss. So $18,000. Our equity is down to like $16,300. So this is perfect. Right before we got to the growth target, it ended up all screwing up. So price is now here. I'm going to add a layer of risk here by saying if this is 100 pips of risk, so if it goes 100 pips above this zone, I will re-hedge. But for now, I'm going to close that buy at break even, and I'm going to hold this sell here so that we can hopefully get a move down. If it breaks above 100 pips, I will re-hedge the buy. Or I'll re-hedge the sell with a buy, I guess you could say. Same shit as this last one, right? Pushes back up. All right, so it pushes back up. So this right here is hedged at a $2,000 loss. So now we're in a $3,000 drawdown. What do? Do we freak out? Do we try to do some impulsive shit? No, we do the same thing we always do. What? We wait for the next trade, manage at the next trade, and accept that we have a 50% win rate. If this pulls down a little bit more, I'll get net long right here. Oh, that was painful. It's going up. Might get another opportunity here in a second. Okay, let's see if it starts to bounce here. Yeah, I don't know about that. Nope, I don't know about that. It kind of just went sideways. I'm going to leave that alone for now. We'll see if it gets to the next zone. Honestly, I think this is likely to break these lows, so I'm just going to wait here and see what happens. And I'm going to stop using this zone because this zone is like not relevant at all. Yeah, so this looks like it's going to break, continue down. So here is what we can do, my sweet children. I'm not going to use that zone yet. I'm going to wait for a little bit lower, then we'll wait for a retrace. A little bit deeper. Yeah, so now I missed it. Okay, cool, whatever. Wait for a retrace. We'll see if it has a, let's go see what the next zones are on the 4 hour here. Oh, I mean, there's a pretty big zone right here. Okay, yeah, let's wait for a little bit lower down in this major zone. Then right there, it's likely price could bounce. Then we could have a clear risk structure for what to do. So it goes deep into this zone. I would have entered up here. So I'm just going to enter that. I'm going to keep, we'll keep all this hedges on. So that's a $1,000 risk, $2,000 hedge. So $3,000 of hedges. And this will be a buy here with a sell hedge under here. Hopefully we can get a little bit of profit. And I'll put a little bit closer. This is a $1,000 risk. So it goes up. Right here is a likely area it could bounce because this previous low could turn into a top. So again, we were wrong 1, 2, and then 3 times when it broke again above this zone. 3 times in a row we're wrong. But guess what? The one time we're finally right, we make a profit. Now it's just a matter of how much. So if this right here was 112 pips of risk, this move up here to that next zone was about 300, we'll say 320 pips of risk. It's about a 1 to 3. So in this case, roughly averaged out, this will be about this 3 units of risk is a $3,000 profit. We can use that $3,000 of profit to close the losses on these other 3 invalidations, like trades gone wrong. And now we've got ourselves a nice little winner, boys and girls. So the account balance remains the same. We were in a $3,000 drawdown, made a $3,000 profit on an open trade. It averaged out to be break even, minus maybe a few swaps and commissions. Roughly the account's around $18,300. Now let's wait on the next damn trade and see if it works. Price could bounce here at this zone. Honestly, I think it's going to break out with how much momentum this candle's got, but nobody knows what's going to happen. I'm going to enter there. And then if price breaks above this zone, I'm going to hedge like right here. This is $1,000 risk. I don't know if that's another zone right there. We'll wait and see if this invalidates. We'll wait and see what we should do at the next zone. And the potential target is right there at that previous low. Oh, baby, don't play with me. Don't turn around. No. Okay, we need how much? 2,000 to get the account to the growth target. That's 120 pips. That's 100. Oh, we need 240 at least. All or nothing. We got to go. There we go. So we go 240 pips. Let's close it. So right about so it got there. So 240 pips. We'll close that there. And what was this? Oh, that was our previous potential hedge. Sweet. So now with this one, we've got a $2,000 winner. And right here, we'll do plus 2,000. So the account was grown from 10,000 to 20,000 on this one pair over the course of a couple months, 100% gain. And guess what? The cool part is that we had zero strategy at all. It was just saying, I think this is going to happen. And if that happens, this is what I'll do. And if I'm right, we'll do this. And if I'm wrong, we'll do this. As you guys saw, you guys go back and calculate the metrics. Roughly half the trades would win and the other half the trades would lose. We had a couple winning streaks there of like 2-3 trades in a row. And we had a couple losing streaks there of like 2-3 trades in a row. I think there was like, 3 trades in a row was the worst losing streak before we finally got a winner. If you just literally keep it so stupidly simple that you barely have to do anything, you draw support resistance zones and that's it. You just set 2 alerts, like one at the next support below price and one at the next resistance above price. Then you just chill. You just go smoke a big bowl of some substance that, whatever you want to use to make yourself, inebriated or, slightly intoxicated. And then you just chill. You just literally smoke all day, just like boom, just like chilling, not doing barely anything. And the moment price gets to a zone, you enter. You have an invalidation already predetermined, already preset. You're right or you're wrong. You know what to do if you're right. Cool, you make a profit. Great. Random chance. You're awesome. And if it goes into the drawdown and you're wrong, you get hedged. No problem. You just wait for the next zone. You roll out of it at the next zone. I will routinely have crazy winning streaks and I will routinely have crazy losing streaks. The only way I'm profitable is because of my simplicity and my risk structure. If you'd like to learn more about how I do this and how I make profit, now I've grown 6 accounts in a row from 50K to 100K and tracked the whole damn thing on Instagram, Telegram, YouTube, and in Discord in my close friends group. You can click the second link in the description as well, and that take you to my website, has all my products there. I sell 3 products. One of them is really comprehensive. One of them is like a little bit more simple and straightforward about how I personally trade. And then the final one is my close friends group, where you can just literally follow all my trades live with all the exact little details of the risk structure, planning, management, full updates. You could tag me at any time in the MFX close friends group. And you can, what else can you do? Like the live group Q&A sessions every morning that we do during the weekday. Really good resource if you're just looking for a community and the ability to literally like increase your learning curve and speed it up by being able to ask someone a question and get a response instantly. Bunch of people in there who can help. We got like 500 members in there at the time of this video, for example. And it's really cool. All those links are at the second link in the description. You can find out more about the products that I have, as well as you can follow my free Telegram channel, which you don't have to pay me anything. You just follow there. That's what most people do. Most people just follow my free Telegram channel and they get plenty of value there. And then here on my YouTube channel as well. You don't have to subscribe. You don't have to like this video. You do whatever the hell you want to do. I'm just here to show people what works well for me, because it has worked really well for me. And I've proven it for the past 5 years, calling all my trades live, most of them for free, in my free Telegram channel. Hope to see you in there. First link in the description. And hope you have a great rest of the day. Keep things simple and control risk when you're trading. Completely changes the game. Cheers.